Hi, everyone. Welcome to a KE Report webinar produced in conjunction with Focus Communications. I'm your host, Corey Fleck, also your host over at the KE Report, where we cover metals, commodity price moves, as well as a lot of reports on the underlying stocks in the resource sector. In today's webinar, we're touching base with Eloro Resources. I'm joined by Tom Larsen, President and CEO of Eloro Resources. Now, Tom, it's been a while since I last got an update on Eloro. I'm really looking forward to hearing what the company is up to in Bolivia at the Iska Iska project. This company was a market darling about 4 or 5 years ago as the market really took notice of this Silver-Tin-Polymetallic project. Since that time, I know you've advanced this asset, but now it's really about where this asset stands and what work you're going to be doing in the near term. So everyone that's tuning in, you will have the ability to ask questions. I address you to the chat function, also the Q&A feature within this webinar platform. Please use that area to type in your questions to me, and I will compile all of them for the end of Tom's presentation to get some answers for you, more of the refined details of what you're looking for. So, Tom, thank you very much for taking some time for us to put together these slides and share the Eloro story. I'll throw it over to you.
Well, first of all, thanks, Corey. I haven't talked to you in quite some time, as you mentioned. Your reference to us being the darling 3 or 4 years ago, yeah, but I'd say about 6 years ago, we were probably a 20 million market cap company. So we certainly had a fantastic run initially, based on the Lassonde curve, the discovery that on a project that had never been drilled and proved up with major intercepts and silver equivalent values that took the market away briefly. Rationality comes into play here, and I'm more intrigued with what we have today than when the stock was $4 or $5. I know short term a lot of people would disagree on that, but I believe this stock's going to be a hell of a lot higher over the coming many months as we develop this silver tin open pit deposit. If you take a look in the background, that is on this first slide for those that don't know the story. And I'm not going to spend half an hour going through the whole story here because the really important aspects to where Eloro is going is from the infill drilling from the MRE that took place a couple of years ago that was presented to the PEA phase that we're hoping to have completed before year end. This is sort of the exciting stage for us because we're proving major infill drilling success in the open pit compartments, both in the TIP, the tin corridor that we're currently drilling, and the epithermal sulfide silver, lead, zinc, tin open pit concept in our MRE that'll be combined into one major pit with showing fantastic economics, well under 1-to-1 strip. In the meantime, in this background, you're looking at the Iska Iska edifice formation, basically a collapsed center caldera, a property that had been around, volcanism time period, back 12, 15 million years ago. Lots of glaciation in the southern part of Bolivia, where this is located, about 50, 70 kilometers from the Bolivian-Argentinian border. Very limited artisanal mining that took place. There was a tremendous amount of glaciation in this region, much more so than in areas to the north. On the tin belt, in our case, places like Potosi, Cerro Rico, the great discovery, 2.5 billion ounces of silver that has been manually produced since the 16th century. Much less glaciation. So in other words, metals weren't leached out at surface. And this is one of the main reasons. And it's complementary to us today because we don't have all these communities and cooperativas running all over the place. This is a privately owned property, therefore combable. Any state-run mining concern, cooperativas cannot be on this property. So this gives you a little background. That's the volcanic edifice, a 9.5 square kilometer property, and it contains basically a volcano, a collapsed resurgent volcano. And we basically locked this project up back in 2020. I'll go to the next slide, just forward-looking statements we have to abide to. The drilling that took place that created this initial MRE, it started off in August, September of 2020, well after COVID. We were fortunate enough to bring in an independent engineering group to basically bless the property for us with a 43-101 report to allow us to start a never before drilled campaign on this volcano. What we've done since then, well over 100,000 meters drilled, over $60 million raised. It produced a first pass MRE. These are the numbers that came out. This is basically a polymetallic epithermal porphyry type complex that was sort of recognized by both Dr. Bill Pearson and also Dr. Osvaldo Arce, the two co-pros from a scientist standpoint that have really made this discovery into what we believe is to be a giant discovery. With all that drilling, consistent drilling, no blanks, we came in with an initial resource MRE that came out in September of 2023 of over 560 million tons in one area and close to 110 million tons just adjoining to the west. The grades were deemed as too low from the standpoint of the market. They were expecting much higher. And, that's where our stock that had been, a 30-cent stock up to $1.50, up to $3, up to $5, $5.80, back down to $3, $5, $3, $4, $3 over the following 3 years up until that report came out, knocked our share cap, knocked our share price down to almost $1.50, a couple of months later. And unfortunately, the misconception, this is a complex deposit. This is not a silver or even a silver lead zinc. This is a silver tin lead zinc type polymetallic deposit. So when you're trying to get some sort of initial valuation, you're combining the metals and trying to come up with the dominant metal, which in this case we believe is silver or tin, and use a silver equivalent. And so this is where we were getting big numbers when you included all the components, all the metals. But when we came in with the MRE, we had to go through major recoveries, major metallurgical work, which is a must, with this type of deposit. So the grades, the average grades, combining with the metals, was downgraded somewhat, especially on the tin side. However, we knew that this 100-meter spacings that we did to come up with such a big number, close to 600 million tons, first pass MRE. We knew that these intercepts were 100-meter spaced, fanning out as you went deeper. And what we had to do, and what's been proven successful from the technical team, has been the infill drilling, especially in the upper zone, that's going to come out with the PEA and prove in my mind, a very big NAV number. And that's, once we get that NAV number, then there's lots of ways to move forward. So when you look at the in situ metal, of that first pass MRE, even though the grades looked low, we still contained over 298 million ounces of silver. That puts us in the top 5 in situ silver resources in the world, signified by the Silver Institute. over 4 million tons of zinc, 1.74 million tons of lead, and an initial 130,000 tons of what we call finely, more sulfidic type tin, which basically you get recoveries of 50%, not that economic. I'll get into why I'm so encouraged with what's taking place in the new tin zone that we've outlined. But all in, this initial resource proved over 1.15 billion ounces of silver equivalent. This type of endowment, if you can bring the grades up, get that NAV, get that value, could feed an operation for the next 30, 40, 50 years. And that's what creates a major legacy type deposit and attracts not just an industry player, but even a country player. So if we go to the next, this is the actual share capitalization, still very, very small in relation to a lot of, I don't even know if we have a peer, because again, I don't really know of any silver, tin, open pit, zinc, open pit type of model that's out there currently. We have around 93 million shares, 94 million shares outstanding. We have a market cap of around 88 million, fully diluted about 113. I would say there's a lot of legacy shareholders from my old days when I founded a company called Champion. So we've got a good, overall very sophisticated group of shareholders, very patient shareholders in most cases, which I really am appreciative towards. Institutionally, we have Crescat that has around close to 16% of the company. And then I would be the largest private shareholder with around 6 or 7 million. Management and board have around 22%. A junior company of ours, publicly traded with a property about 18 kilometers away, Cartier Silver Corp, has 2.5 million shares outstanding, no debt. And currently, I would say there's about a 5.5 million US, 6 to 7 million Canadian, after a couple of raises that we just completed over the last few weeks. So we go 2 analysts that follow us. However, we have 2 new groups that have come in, CIBC and Canaccord. We do not have analyst coverage from them yet, but we hope to. But they participated in the financing. So we have Cantor, Haywood, Canaccord, and CIBC. So very pleased to have Canaccord joining the ranks, and Haywood again. Management team, myself, I've been in this resource business for a long time. I was a broker back in the 80s, more in the gold field and then the iron ore aspect. But what really intrigued me about Iska Iska was the bulk tonnage open pit logistical side that I learned during my tenureship in iron ore back in the Quebec Trough, where Champion basically evolved from in 2006. And today's around a $3-4 billion market cap company, thanks to Mr. Michael O'Keefe, who I brought in 2013, 2012 to lift Champion into a major iron ore producer, one of Canada's top producers today. A great team under both Dr. Osvaldo Arce, who's our executive VP Latin American operations, who actually brought the project to us, and also Dr. Bill Pearson, who introduced me to Osvaldo. And Bill's had extensive experience over the many years. Especially, he's a big systems guy. He was the guy that really put the Jacobina gold deposit in Brazil onto the map, which today is owned by Pan American Silver. He introduced us to Peter Maroney, who's been very helpful on the senior corporate advisory side. Peter was the founder of Yamana. We have Dr. Quinton Hennig, who's been very, very helpful. And he brought Crescat into the company on the shareholder roster back in 2020 when we first started drilling this never before drilled project. no geophysics, nothing had been done because of COVID. We started drilling in one of the adits about 150 meters south of the top of the volcano, where we saw sort of sulfides, and that's where we started in, because as I mentioned, everything was leached, oxidized, higher, up on the top of this edifice. The team is solid with Mike Hollywell, our engineer, senior VP, engineering metallurgy. He's on his way down to Bolivia as we speak. He also works with Sir Mick Davis on the Cornish Metals, which is a major, the South Crofty tin operation in Cornwall. Mike's from Cornwall. He brought in Colin Belshar, who's our VP mining engineering. So we've got a lot of basically at this stage, knowledgeable people when it comes to, how tin especially can work in a run of mine operation, which this is going to be. And also they're very good with other metals from a recovery standpoint. Chris Holden, who's been working with me, who used to run 2 funds on behalf of Investors Group on the buy side. He helps tremendously on the corporate development side, which is becoming very, very important, because where are we going with something this big? Obviously, we ourselves can't finance it without diluting the heck out of the float, out of the shareholder cap. And there's lots of ways to move forward on this, and Chris is, as long as we produce the goods, which the drill bit is doing, Chris has been very, very helpful. Strong team overall. So we continue on. That's the tin belt. This is a very well-known. Tin is a very, very scarce metal. This runs 1,000 kilometers just into the northern part of Argentina, straight up, and then northwest into southeastern Peru. There's 2 major mines that produce probably in total 10% of the tin that's produced annually worldwide. The San Rafael, which is in southeastern Peru, owned by Minsur, and that's the Brazea Group. It's a major tin operator. They're in southeastern Peru on top of the tin belt, the Bolivian tin belt. And then you have another project called Choroque, which is about 50 kilometers north of us. That's been in operation for decades. It's an underground mine. And the reason I'm really focusing on those 2 operations, it's very, very, it's going to be very helpful for our tin deposit and how we want to move that forward. And the basic reason is that they're uplifts from the deep tin porphyry, just like you have copper porphyries that run up, from Argentina, Chile, up into Ecuador, Peru, those areas. We have, in this case, a tin belt. Tin is 300,000 tons of tin a year produced. 10% comes from 2 mines here on the tin belt. Iska Iska, our tin operation, I think will be one of the biggest out there as the drill proves it up over the coming months. Next, so just one other thing. You're seeing some of these world-class giant type deposits. San Cristobal, you see San Vicente owned by Pan American Silver. It's a well-populated area of strong mining, and anyone that knows about Bolivian mining, there's not a lot of news that comes out of Bolivia. It's a landlocked country, but it's so underexplored. I'm sure there could be 3 or 4 other major tin uplifts in this tin belt that could create a lot more. But, to find it and to move forward, we've been at it for 4 years, and, so we've got a real jump here. Next. So infrastructure, all important when it comes to moving bulk tonnage. We follow the San Cristobal mine operation, which was owned by Sumitomo. It was once upon a time owned by Apex Silver, and then San Cristobal were brought in on an off-taker and a 30% asset owner of the operation. They ran into some issues in 1998, 99, when the whole market, went upside down, commodities especially. But San Cristobal, like the Sumitomo people, very, obviously a very big private, multi-diversified type company out of Japan, ended up taking it over, spent $1 billion plus to create a 50,000 ton a day open pit operation. They hired engineers out of Colorado. That's what introduced, I believe, Dr. Quinton Hennig, who's also from Colorado. He had some friends that were very much involved with the management, the running of the San Cristobal mine back in 2006, when it first came into production under the ownership of Sumitomo. And in fact, Dr. Quinton Hennig and his team, along with Haywood, ended up buying the San Cristobal mine operation a couple of years ago from Sumitomo. And so we've signed a non-disclosure with San Cristobal, with Dr. Quinton Hennig. So it's been very helpful for us when we come into the economics for our PEA. The only difference is we have a tin component, but our grades are somewhat similar to what the San Cristobal operation is. We hope to improve them. So, the drilling will tell us the next 10,000 meters that we're doing currently as we speak. But we've got a really good guideline and have good advisory through Dr. Quinton Hennig. Very, very helpful. So next. Now, part of the funds that we've raised, I want ownership 100% of this project. It was a 10 million US earn-in. Well, when I say earn-in, money's to the actual vendor, the private family, the Villegas family, a very wealthy family, Bolivian standards at least, in southern Bolivia. They've been so helpful with us. I mean, we rent one of their buildings in the small town of Tapiza, 30 kilometers away from the Iska Iska project. It's roughly, again, about 40, 50K from the Argentinian border, Salta, the province of Salta, the northern part of Argentina. But Edwin Villegas, the patriarch, he and Dr. Osvaldo Arce, who oversees everyone, the staff, everything that's going on in Bolivia on our behalf, thankfully, they're very close and they've been so helpful. And even last year when things were a little tough, they extended property payments. They want to see this work. There's a great video on our website. It's called Viva Bolivia, Viva Tapiza. And it will introduce you to Dr. Osvaldo Arce. It'll introduce you to the owners of the property, the Iska Iska property, the Villegas family. It'll introduce you to Pablo Ordane, who I should have mentioned, because he's a very important part and a director of Eloro. He's a senior partner with PPO, a legal firm out of La Paz and Santa Cruz. He's been fantastic. He oversees all of our legal documentation, legal contracts, change of contracts. Anyway, so Edwin Villegas, we've been able to pay down. We're down to really 2.8 million US to basically take over 100% ownership. We have until July 25th. There is another 1.8 on top of that, but that's based on there was an addendum to the contract where we would have another 2 years to pay that down. Once we get title on the Mina Cassitarita tin property to the south, not related to Iska Iska, but we believe could be part of that tin porphyry that's accessible. We drilled 1.8 million US 2 years ago, and we weren't able to get clear title from Edwin Villegas, who also owns that property. So we amended the terms of the Iska Iska deal, subtracting 1.8 million. That's why we're down to 2.8 million left. I have and I think he's acceptable to it. It'll be partial shares and cash to end up controlling 100% of this project, which I think will be very, very important as we're talking to outside interests over the next year or so. So next, this is gives you a little glimpse of the size potential, what we're dealing with. That's the sort of the inside the caldera collapse center. That's where you'll see the big open pit. These adits, these are where we started drilling the Heracasa back in September of 2020. We did some radial drilling and every hole hit, but then it was around the 7th or 8th hole, we went diagonally right down into the Santa Barbara adit area, right into this whole complex, and came out with a stupendous number, I think 400 meters of 150 gram silver equivalent. Just an amazing hole. That's what got people excited starting off. This gives you an idea. Remember, the perimeter is around 9.5 kilometers, but you're going to see probably a strike length of 2.5 kilometers. And this is where when you're dealing with Bolivian operating costs, because it's cheap, very, very cheap to operate in Bolivia. The Boliviano obviously has been getting beaten up. But even without that, things are very cheap there. So our operating costs are probably almost in the lowest part of the quartile of any jurisdiction worldwide. So if you can get under a 1-to-1 stripping ratio, you can get all in to, Chilean port, to then move your concentrates to an end user. You can get them there under $25 a ton, even $30 a ton, and you can gross profit 50, 60 after recoveries on the metals. You're making 40, $50 a ton. You're doing 35,000, 40,000 tons a day, 15-year mine life. I can't really come in with the actual number in regard to how many shares are outstanding. That gives you a valuation, even with a 70% discount. When the PEA comes out, I'll be able to be more vocal about that, but it's not hard to figure out. This is sort of gives you the idea of the drilling. The black dotted line is what sort of encompasses the 600 million tons from surface down. The red dotted circle oval is where we've been doing all of our infill drilling. And that's what's going to be the 12, 15-year mine life in the PEA, that open pit area. That's where we're doing 50-meter spacings. And we came up with 4 press releases in the last 6 months that came out with our previous 10,000 meters of drilling since that MRE misconception. And those four press releases since, and some of the drilling that we did last year, shows some very, very high grade. And I can go through a bit of that with you. If we continue, this is sort of the 50-meter infill. So we're just infilling this. This is for the PEA. And this gives you, our grades are improving. There's a lot of people that thought there was a lot of waste in the initial MRE. Well, yeah, 100-meter spacings, I guess, give us a chance to infill, which we've been doing, and it's not waste. We're coming in with high grade in certain areas that's going to really trying to get a $50 profit margin. I'm looking forward to the PEA. Let's put it that way. We continue on. These are some of the holes I mentioned. These are the highest sort of Iska Iska top drill intercepts. So it gives you these intercept numbers, the 325 meters of 136 grams silver equivalent. If you combine these metals on top, the silver, the tin, the zinc, the lead. Look at these tin numbers, though. This is what I'm talking about. Other than this 0.43, these are somewhat low, and they're also what we deem as in sulfide. And so you're only getting 50% recoveries with these types of numbers. So not overly economic. It was added, though, into the valuations when we first came out with these figures. But now I want to get into why we're so intrigued with the tin component. These are some of the press releases that I was just alluding to, the latest from November 2024. These are infill holes for the open pit model. these aren't 12, 14 gram silver that people were thinking this is just some low grade gravel pit. These are like 66.9 grams silver over 289 meters. Just the silver alone over that type of length is filling in this open pit area. 126 grams silver over 122 meters. We even got a high grade 16.5 meter grading 0.45 tin. 0.45% tin is close to 9 pounds of tin. So 9 pounds, multiply that by $15 a pound. You're talking $130, $140 tin value per ton. So now that 0.45, though, it wasn't in sulfides. It was what we call oxidized cassiterite, where recoveries are up to 80%. Totally different dynamic. And that's what we're starting to come in with this area to the west, which I'll show you about. This is host what they call intrusive breccia body. It's like a feeder system that comes from deeper down, what we believe was the porphyry system that's fed this huge endowment of metal. Continue on. So January 6th, another press release, 127 grams silver over, where was it here? Over 41 meters. But tin was moving up again, 0.31% tin. So, that's not bad. That's 6 pounds, 7 pounds, over $100. Another 45 grams silver, over 81 meters, all in that little red area, red circular area, 53 grams silver, over 45 meters. These are certainly different numbers than 16 or 15 or 14 grams silver the market assumed we had. We continue on to January 23rd. And this is the game changer for me and a lot of the guys on my team. This is a huge tin discovery. This is the whole DSB 72. We intersected 33 meters grading 1.39% tin within 87 meters grading 0.74%. Like 1.39, just multiply that by 20 and multiply it by 15. You've got a huge value per ton just on that type of grade. The percent. The thing that was really telling also was that within this hole you were getting 1.5 meter long samples encompassing veins of 6.65% tin, 4.97% tin, 3.5% tin, 2.75% tin, but it's all in what they call coarse grain, high temperature cassiterite, which is very amenable to gravity separation. So it's cheap to extract, and the separation, the recoveries are down to around 80% potentially. We're doing a lot of testing as we speak to make sure that, in the PEA that we can move on this material that'll be part of the PEA. It wasn't in the mineral resource on the economics, but now we're going to be able to add tin to the overall mix for that NAV. But the thing I'm really intrigued about is those numbers are identical to the underground operations at Minsur in their big San Rafael tin operation, and Cherokee, which is 40 kilometers north of us, underground mining. We're going to be able to open pit a lot of this stuff. So, the cost, the profit margins, the size potential, it's a different category. So this is what we're slowly working towards. Dr. Bill Pearson, who, he's an expert when it comes to geophysics. He's relied, quite a lot on geophysics, and most of the time he's 100% on it. I mean, no one's perfect on this stuff, but he was able to determine the area, this tin area, based on low chargeability. And because it's oxidized, it doesn't charge, whereas sulfides are high chargeability. And this is what he was able to outline, this area, which is adjacent to our open pit, which will be a a combined open pit. I'll show you the visual on that in a sec. And then again, we came out with another great tin. It was 50 meters just south of hole 72, DSB 72, or what I call the transformational hole to the whole system. Another 0.55% over, within 91 meters. That's over $150 rock. So I mean, tin is 3 times the price of copper. So if you can get a big coarse grain tin, cassiterite tin that's in an open pitable sort of format, you're really off to the races. Next. So this gives you the visual. Here's the TIB. We call it the tertiary intrusive breccia zone, or I call it the tin intrusive breccia zone. And then you have the epithermal zone, the big, more sulfidic silver, lead, zinc, and tin, but the tin is more in sulfides. You're getting much better recoveries in this TIB area. This is wide open. We believe it's an uplift from the tin porphyry. It's an apophyse to the tin porphyry deeper down that fed these throughout that 1,000-kilometer reach, that tin belt. And we've hit onto one. And right now we've got 2 drills turning as we speak, infilling this TIB, this upper area here, which will eventually become part of the open pit. That value is going to enhance this, especially with the higher grade silver component areas within this, into something I think I'm looking forward to reporting on. So that sort of gives you a visual. This is just another magnetic inverse model, sort of tries to give you an idea of the chargeabilities, where the tin domain may be. To me, it just shows potential scale. It's all, obviously this is not all economic, but it gives you some sort of characteristic as to the chargeability features and where the tin domain could be. And finally, out of the tin to the west, we put a hole in. Remember, these holes, we planned before we were getting these types of results. In March 2025, DSB 75, we intersected more into the silver area, but north, very high to surface. And we encountered 151 grams silver over 135 meters. I mean, that's not bad for an open pit, 151 grams. Broader interval of 309 meters, grading 90 grams silver. And it was interesting, we took 7 tons, a bulk sample, right about 2 months after our MRE that came out in September of 2023. We sent it over to Wardell Armstrong, or under the supervision of Mike Hollywell. And he did a test on it, assayed it, along with 2 metallurgical holes, drill holes in the same material. The assay results came back on the 7 tons over 90 grams silver. And in the 2 metallurgical diamond drill holes, PQ, came back at 30 grams silver. So it gives you an idea of when you're mining this, how you encompass when you're bulk mining something like this type of deposit, how lucrative it can really, really be. The high grade intersection of this 309 meter grading 90 grams silver also included over 960 grams silver over 9.75 meters, close to 1,000 grams, within a wider range of 34 meters grading 440 grams silver. Anyone that wants to tell me that this deposit is low grade is out to lunch. Next. And then finally, another, just continued more reconfirmation of higher grade valuations coming into this open pit. We got some good tin, a hole intersected 0.31 silver over 28 meters, DSB 76, 121 grams silver over 52 meters. Just continuation that'll help that overall 12-year, 15-year mine life, because these holes are all within the open pit PEA model. So we've restarted new definition drilling, 4,300 meters. I wanted 3 drills on the site. Oswaldo could only get 2. We hope to have a third in about 2 to 3 weeks. Bolivia does have some issues. I mean, it has, it had some fuel shortages on and off. I think those are improving. There's a huge discovery and gas discovery in northwestern Bolivia that just took place. Schlumberger's in there drilling right now as we speak. But fuel can be a problem at times. But we do have fuel set up for the next drill that's coming, should be on site within 2 to 3 weeks. So we plan on moving quickly on this drilling, this next phase drilling campaign, which will open up the tin, the tin zone from the open pit area down, just adjacent to the silver, lead, zinc open pit model, where we're getting higher grade silver. We will move then into after we've drilled around 4,300 meters in the tin area of infilling 50-meter spacings for the PEA. Then we'll continue with more infill drilling to the west into the open pit silver, zinc, lead area. So we know exactly where we're going with the drilling. It's not wildcat drilling. We're pretty confident that we'll be able to infill a really solid 12-year mine life for the PEA. That's what this drilling's all about. There's huge upside blue sky on this system. I mean, this is probably the 3rd, 4th inning. This is the area, though, that we know of from the previous drilling that seems to be the higher grade area. But there's other areas within this volcanic system that we own, shortly will own, that can bring even more upside. So when you look at the Lassonde curve and you come to a finite number, this isn't finite. We are finite on what we expect in the first pass PEA, but we could continue drilling, infilling deeper. And I don't want to. There's just lots of solid upside to create more discovery, even when you're into potentially some sort of mining operation. So this is why I believe Iska Iska, like San Cristobal, could run for many years. We're fortunate. We're very, very fortunate to be in this situation. This is just a quick slide on tin. Tin's in deficit. There's so much demand for tin right now. Americans they use over 50,000 tons of tin a year. They consume it. They have no domestic source. They're trying to outsource it. The last I heard, they were trying to do a deal in the DRC. Well, there are sort of rules on DRC and how the world looks upon tin, from the standpoint of whether they're using cheap labor. I don't think they are on a couple of the tin operations, but it's a difficult place. And most of their tin concentrates end up being smelted in China. China probably controls 70% of the tin market, and most of it is more downstream. They get most of their tin from Myanmar and Indonesia, and there's restrictions coming from those two countries. So, tin is in a very, very interesting situation, but people don't really know that much about tin, so it doesn't get that appeal. But believe me, I think from an economic standpoint of running a mining operation with tin in your mix, I think it can attract some major players, some end users that aren't, your big sort of typical smelters, but a lot of industrial players. I mean, Texas Instrument, a lot of these different companies need tin for soldering purposes. That's one of its main sort of elements, using tin for soldering in electronics and car vehicles. In so many, there's probably 2,000 applications under patent that's, through the International Tin Association. So I'm going to leave it here because, I can continue on and on and on, but I think I've given enough sort of information at this stage.
Let's answer some questions here, Tom. Thanks for walking us through that. I guess just one question to kick us right off. Just a little clarification then about the focus of the next program. It sounds like you're very much focusing on the tin component, not so much the silver component. Is that infill or stepping out to test this tin?
It's turning into more infill, just from some of the holes. I mean, there will be probably 2 or 3 step outs, but we really want to try and get some of this tin into the PEA. So it'll primarily be 50-meter step outs. But I mean, this is a wide open corridor. Now, as you go deeper, so we won't be doing a lot of deeper tin cassiterite drilling. It'll be more infill. There'll be 1 or 2 odd step outs, but we have a pretty good idea from Dr. Pearson's geophysics on the oxidized area, that not that the whole thing's going to be commercial, but we got a good shot at getting some good tonnage for the mix, for the 35,000 ton a day model that we're working towards for the PEA open pit.
Okay, a few questions coming in on this PEA. What date do you think it could be published, and are you funded through that PEA publishing?
Yeah, this is what I love, and this is what got me in so much trouble on the MRE. When's your MRE coming out? When's your MRE coming out? And,
people want to know timelines, Tom. They want something to look forward to.
I know they do, and I don't blame them. But I just don't want to make the same mistake. I think comfortably we can have a PEA out before the end of the year. I'd like to leave it like that. I think with the payment that we're making, the $2 million US, well, with the payment that we're making with the Viegas, right, that we're in negotiation with right now, at least, we probably will do another $3-4 million raise. I know people hate that, but I think I can do it internally and really quickly, if need be, just to finish off a very, very robust PEA. Because, I mean, again, we've got roughly 5.5 million US. And if you work out the numbers, it's around 250 US now with the exchange, 250 US all in. That covers all, salaries, everything, Toronto office, Bolivian office. So 250, if you can do 8,000 meters, 10,000 meters, that's 2.5 million US, give it a 10% contingency. Then you got another 2 million, up to 2 million with Viegas. And then you've got to finish off some of the metallurgical testing. We could probably get in without another raise, but we'd be on fumes by the time the PEA comes out.
Okay, thanks for addressing that. After the PEA, I know this is very forward looking. Do you intend to move to a pre-feasibility study, a PFS in short term?
100%. We're going to move and most of the work will be done because the metallurgical studies, all the work that we've done, the project financing, modeling, all of that work we've already paid for 90% of it, which is all PFS stage. Even our metallurgical work is almost deemed PFS. What we have to do is then implement probably 30,000 meters of infill, like going to 25-meter spacings to get that, that into a proper feasibility status. So you have to go back in and infill even more for that PFS. So that's the only cost. And that would be probably around 10 million US to get yourself to a formal feasibility study. But, that I don't think, however long, if we can get 3 or 4 drills to do that, there's lots of, how does this thing end up, going into production? How do you see this? This is what's really intriguing me is long as you can get that $50 profit margin per ton of material, you've got an example of success in this country called San Cristobal. Even when they had Evo Morales running around trying to nationalize certain things, they didn't touch San Cristobal. The reason was it was so big and it was such a revenue generator, royalty generator for the government. And they still made a ton of money. Even though they were private, it's hard to get, but anyway, you can you just access their routing. Like there's major ports that can take on like Chinamax type vessels that are set up, like, in northern Chile. That's where the San Cristobal concentrates end up going before it's was historically, and still is for the time being, when it was shipped up to Japan to their smelter. So this the logistics work. We've got the water, the power, the access. We're 30 kilometers to rail, so we've already got the bimodal sort of transportation cost built into our PEA. What the cost is to grade that road to get 28 trucks to offload onto the rail carts, onto the rail that passes by San Cristobal all the way down the same route. So it's a question of, the key here is getting those grades where we can recover $50, $40 profit margin per ton. That's the focus. And if that tin comes in the way it's coming, and we can get an average 40, 45 gram silver, along with 1.5% zinc, 0.8 lead, and get that tin with an 80% recovery, man, oh man, it's looking good.
Okay. So, Tom, another couple questions here. Any other metals, especially critical minerals, within this deposit?
Well, this deposit, the Bolivian zinc, has always been very conducive, like to tech, because of its indium count. So indium is somewhat deemed as a special type metal. So in our case, we've got around 800 ppm indium in a lot of our zinc, which is deemed as a positive. We have not tested all potential critical metals because it's expensive. At some point down the road, we certainly will, because Dr. Oswaldo, who's written volumes, 2 major volumes on metallogenic deposits. They're called giant deposits in Bolivia. He's the go-to guy when it comes to. He was president of the Geological Society of Bolivia for many years, from 2010, 2018. His father was general manager of Comabol, that basically before 1986, when the tin market collapsed, looked over 35 different projects throughout Bolivia. And by the way, he says our area in the south is the most conducive for mining anywhere in Bolivia. So, bundle of knowledge, lots of knowledge from these people. So yeah, I mean, I wouldn't surprise me if there were some critical metals, but I can't say right now.
Okay, that's fair. Can we also compare this deposit, Iska Iska, currently, to some of the other large monster tin deposits around the world in terms of tonnage and average grade as it stands right now?
I don't know these artisanal or these formation, like these high grade, like the Ma mine in Myanmar, I believe, how that's developed, whether it's from a tin porphyry. I know they have there's a tin porphyry apparently recorded in the Himalayas. It's never been sort of, and this goes back to, just basic old geology. So all I can compare this to is to the fact that we would be in the top 5 tin resource stated by the ITA, the International Tin Association. So it's all third party, that verifies this. And that was based on our MRE. So, I can only compare Iska Iska to Cherokee and to Minsur because of the tin component. It seems very similar. So I think we'll get the same sort of tonnage as those 2 major tin deposits that, have 10% of, they produce 10% of world consumption yearly. I think that's as far as I can go with it at this stage. But the grades, yes, very much. Our grades are totally conducive to those of, similar to those of Cherokee. and Minsur. So that's all I know.
Okay. So grade is carrying this, and you still just making it bigger right now, or at least looking to do that.
Yeah.
Can you explain the importance of this tin being in considerite versus other soils when it comes to potential mining costs?
So again, as you know, I'm more of a commercial guy. I'm not a geologist. I'm not a metallurgist. So the basics. I mean, I listen to these guys that have doctorates the last 4 years. So, it wears off a little bit on me. But apparently, cassiterite is coarser grain material, so it's easier to separate. It's a cleaner material. So you can use gravity, which is a cheaper way of beneficiation. And it's a lot of it can be in veinlets with a higher grade host of cassiterite around those veinlets. Then you compare that to a sulfide tin, and it's out there. It's called wood tin, but sulfides usually sometimes it's associated with things like even copper. So the recoveries, it's much finer grained, so it's more finely disseminated. So it's harder to recover. And you almost have to bring fuming into the process. So your recoveries go down to 50%. And usually you're not getting that granulation. You're not getting that value. But it can still be, yeah. So you really want cassiterite, coarse grain. That's the ideal.
Okay, sure. You brought up Cartier Silver, kind of a sister company to Eloro, also in Bolivia. Are there any synergies between these two projects, and how close together are they again?
They're 18 kilometers apart, 18, 19 kilometers apart. The Ganalbert property would have gone into Eloro, but the owners, another privately owned, that's number one when you want to work in a place like Bolivia. You want to be involved with a project that's privately owned, so that you aren't forced to have people walking all over your property, or that you can only earn up to 50% if you're involved with Comabol, for instance. So there's the Villegas family own the Iska Iska, and the Segovia family, another family, prominent family, mining family, own the Ganalbert property. And we didn't want to mix the two without getting into it. So we decided, like Cartier was sort of plodding along, another company of ours up in Newfoundland. Not, a lot of targeting, but no major success. And so we decided to run the Segovia property, Ganalbert, into Cartier. And I mean, that's how it started. Cartier has 2.5 million shares of Eloro, so it does have a good share position. That's been over the many years. It's sort of accumulated. It's on the CDNX. And the Ganalbert, the great thing about the Ganalbert property that Cartier has is that it's more in galena, it's more in lead. When you're in lead silver, it's mainly like when you have zinc and silver, it's a little more complicated. When you're in zinc silver, it's a little more complicated. But when you're in a galena lead silver, it's cheaper to beneficiate, like just in layman's. So this is primarily galena silver. So you've got a lead concentrate and a silver concentrate that was being produced. So this is a former mini producer, but we're talking like 20, 40 tons a day. Side of a mountain with drifts in, pulling material out, probably getting 60% recoveries. But it's in a collapsed caldera, maybe part of a collapsed caldera, sort of similar to Iska Iska. It'll never be as big as Iska Iska. Iska Iska is huge. But I think the grades, like if you take a look at the website, the grades are looking pretty good historically, like more like 150 grams silver. So we have made payments. It's a $4.5 million buyout. We're making a $500,000 payment in June, and we'll own 50% of the Ganalbert. We will start into some form of drilling underneath the mine site. We couldn't do that because part of the deal before was that the Segovia still operated it up until the second payment was made. So with that payment being made, we can drill those targets that we wanted to drill in the first place. So that'll be up and running probably in September, October. We'll take a couple of drills over there.
All right, final question then, Tom. We do need to talk about the political situation and community relations in Bolivia. Look, Bolivia has had some economic troubles. Also, governments have been in flux, let's just say. What can you tell us about what Bolivia is going through economically, how it could impact Eloro, moving the Iska Iska property to another stage, and also permitting?
So one thing, there's a real differentiator when it comes to places like Bolivia and, let's say, Venezuela. Bolivians are very, very proud people. There wasn't a lot of immigration coming in to Bolivia like there was in Venezuela. Venezuela, a lot of Caribbean background, a much bigger country, a much more populated country. Bolivia is a small country. There's only 12 million people. Bolivia's had a history of, once being on the coast. Chile, northern Chile was Bolivia. Bolivia used to be called Peruvia when Peru and Bolivia were one country. And then you had the Peru-Bolivian situation. The Bolivians have been very, very solid, strong people. The last thing they're going to do is have any nationalization. That government, whoever it is, will be thrown out in 48 hours. That does not happen. And that's the huge misconception. People think, oh, Bolivia, it could be another Venezuela. It's absolute horseshit. We've been there since 2019. I listened to Pablo Ordane. I listened to Dr. Osvaldo Arce. I listen to those that have lived in the country and are so proud of the country. So the basics, you'll never see anything like major expropriation. You'll never see it. And there was never any major expropriation in Bolivia other than any community unrest that constitutionally would allow an Evo Morales to come in and create an issue. You don't see that anymore. But I mean, look at it. If a foreign company comes in and does something untoward to a community, aren't being smart, yeah, just like any normal place. So now, when it comes to the economy, yes, Evo Morales blew a lot of oil revenues, energy revenues. Actually, we benefited somewhat in the southern part of Bolivia because there's rail and paved road and hydro. So we actually are quite lucky. But overall, he squandered a lot of the money and didn't develop like some of the resources that he could have, like the lithium, for instance. Sort of backward thinking, always wanting to control it. So, that's been an issue. And there's no huge middle class to this. So they've always had there's always been a bit of an economic struggle, no question. I mean, they have improved from mining, like San Cristobal probably contributes 30-40% of annual GDP at least to the coffers for Bolivia. So it's because it's big, just like Iska Iska will be big. So, these types of operations will always, I believe, do very well. They might be, the royalties from them might be a little higher than usual. But my point is that foreign protection investment agreements, I think you're going to see a lot more of, especially after this next election. The election has been Luis Arce just resigned the last 48 hours. He was the former finance minister under Evo Morales. So the Mass Party, which backs Evo, because look at it goes back to 1986. After the tin market collapsed, all these miners, these tin miners, were out of work. And that's what created cooperativas. And those cooperativas ended up getting political. And so and that's what sort of the Mass Party is all about. And in turn, they don't pay tax. That's how the Mass Party is kept very strong. So you've always had that bit of social unrest, with that. But their social unrest isn't like, killing 200 people. It's blockading routes and problems that way. They're not a vicious, they're not like DRC. So what I'm told, and I just listened to Pablo and Oswaldo, and before I got onto this call, I talked to Oswaldo. Okay, where are we with this? So he feels that this new young leader, Andronica Rodriguez, a young Mass Party leader, if he brings in both Evo Morales, who can't run again constitutionally and still has a warrant on his head, and Luis Arce, if they bring both their groups in with Rodrigo or this Rodriguez fellow, they could get 60% of the overall vote and win. If they do not, if Rodrigo says no, then you've got the right side, which has huge foreign investment. This guy Chora, who wants to back the right wing, and all that you see there is just much more sort of attractiveness for major foreign investment to come in sooner rather than later. Long story short, I don't know who's going to win. I think if as long as the Mass Party don't have control of the Congress, in other words, 2/3 of the vote, I think things can move along. And I think based on if the three parties on the right out of Santa Cruz can come under one leader that they're trying to do, it's going to be a very interesting election. That's all I've got for you on it.
Okay. Hey, that's a lot to take in there. There's always a lot to talk about Bolivia, but we will wrap it up here. Tom, thank you everybody for tuning in, joining in. If you want more updates from Eloro Resources, you can visit the company's website. Also, be sure to check out my show. Just go to kereport.com for all kinds of company updates and market commentary. Again, I was chatting with Tom Larsen, President and CEO of Eloro Resources. Tom, thank you for your time today.
Thanks, Corey.